Hello guys, welcome back to my channel. I remain on FX. So today we are going to be discussing something really interesting. I want to talk about indicator and why I believe that indicator per se is not necessarily something that is good for a beginner to trade with or to start trading with, or why I feel indicator is a bad strategy for trading, especially for beginners. Okay, so if you're new to this channel, make sure you subscribe to it, hit the like buttons, and then share so that we can continue to get more educative content like this. All right. So before I proceed into what we have today, I want to show you some of the analysis we ran yesterday, and we are able to take some trade, and some are not yet materialized. Some happens to play out this morning. As a forex trader, you need to be very patient with the chart, allow it the market to come to you, and you have to act. Sorry, you have to react towards the market. You don't have to act. Okay, you have to react towards the market. You don't have to act. So we had trade yesterday on volatility 50. So this was the entry criteria. Our analysis is already in place. Volatility 50 has been on a good retracement on the daily. So when you scale down to the 4-hour and the 1-hour, you find out that the 4-hour is bullish, switching from bearish 4-hour structure to bullish 4-hour structure. So we weren't able to participate on this move, but we're able to spot a good entry. Then we waited for this market, although there's a bit of consolidation around this region, as you can see. But we're able to catch this move here, and TP1, we've already done with TP1, but we are still holding the trade because at least we have to have good risk to reward. But at this junction, we are already at break even. Okay, we are already at break even. So like I said, make sure you subscribe to this channel if you are new to it. And then also some of this setup is already released on our Telegram channel. As you can see, though we are still growing, but we have some setup. And even the one we took this morning, like I said, I just took a sell on this. Like, this is volatility 100. I just took a sell on volatility 100. Then my stop loss is slightly above the 15-minute rejection candle. So you can also join us on this by the link to this Telegram channel is in the description box. So this is that on V50. We also have another trade on volatility 50. This one we are done with TP1, TP2, and even the final TPS. Okay, you can see. So we're able to catch this move. In trading, you have to be very patient. You have to learn the art of patience. I was anticipating that there might be a retracement back to this thing to have a confluence trading, which is in alignment with this trend line, but nevertheless, it didn't come to this first entry. So we waited for a good signal to enter, a good rejection candle to enter, and we were able to spot this double bottom here. And then we took the entry here and we took the entry here. After this retracement, we had another entry, and this is where we catch another entry around here, and then that was how we head to final TP. Okay, so make sure you join the Telegram group and participate in signals like this. All right, so this is on step index. We had the step index has been moving to the upward direction, creating series of higher highs and higher low. But then we have a break of trend line and a break of structure, break of 30 minutes. This 30 minutes, if it's scaled down to the 15 minutes, you can see that break of structure very, very visible, right? So look at how bullish the market is, and then the moment this structure, this trend line was broken, and then there's a structure shift. So we waited patiently, although it took some time for the market to get to this spot. then we make an entry here. After this, the market retraces back to our entry, of which we have a good rejection candle, and we're able to scale in. So we are holding this trade at least to get to, this level. Possibly we might be having a re-entry because I can actually see another zone here. I can actually see another zone here. So there's the moment the market break, yes, this is what I will now be looking at. Okay, so if I see a break of this structure and a retest to it, we find another entry. So that's that about step index. We have volatility 100. This one, I just made an entry. Why did I enter this market? Look at this rejection candle, which is still around my POI, like my point of interest. So this is why I took this trade. So this trade has not really moved, but then we are still anticipating the move to the downside. So I'm going to update you guys on how it goes. So here, like I said, today I'll be talking about indicator. Indicators are lagging markets. What do I mean by lagging markets? These are things that has already happened in the past. Okay, as a trader, your major focus is what will happen next. All right, you try as much as you can to get a view of what you want to see next, not a lagging market. And although there are some people who love indicator, but trading price action has proven that indicators are, in the long run, indicators may not necessarily, because the market is changing structure day and night. So there is need for you to keep pace with the market. So indicators are just things that are produced, or a graph that we determine or use to predict what has happened in the past to actually plot that graph, so that's hoping that in time to come, such things will replicate itself. Yes, I understand that market is fractal, and then market keep repeating structures and all, but then there is always tendency that when you solely depends on indicator, you are going to be like, you'll be missing out on why the market behave the way they do. Okay, because the indicator cannot explain to you why markets behave the way they do. Sometimes you make an entry, when you are a price action trader, you can easily tell why your trade did not go well, or why you think your trade should go to a particular direction. When you consider the concept of, in Forex, for those who trade currency pair a lot, you understand, they pay attention to a concept known as liquidity. Okay, you can actually tell why the market behave the way they behave, but indicator cannot tell you that. So that is why to my advice, especially for beginners who are coming into trade, because you have to pay attention to price action rather than looking for indicators here and there. Okay, when you use indicator as a beginner, it will make you lazy. You will no longer pay attention to structure, and the basis of trading, or the basis of technical analysis, is starting with your ability to identify market structure, market trend. All right, which indicator may not necessarily help you to do that. So that is why I feel that price action is always advisable to use when trading indicators. So this is a clean chart of volatility 51S. I cannot use indicator to trade this pair because this is a volatile pair. So I need a very strategic and reliable technical skill of price action, studying the historical price movements, coming to the daily, running a top-down analysis to break down the chart so that I can find good entry criteria. So this is why I feel like trading price action, is better than using indicator, especially for beginners. So if I want to make analysis here, instead of me running for indicator, all I would just need to do is try to identify my trend by zooming in and out to see what market is doing, and you can see the market has been bullish. And what I need to do is identify recent market range, which is this recent high and this this is a higher high, yes, and then this higher low. All right, this is a daily range. This is a daily range. So with this, I've already determined the trend of the market. I can also go down to the 4-hour to check for this thing. So on the 4-hour, I can see, you can actually see that the market is still bullish even on the 4-hour. So this is the recent 4-hour higher low. All right. So based on expectational order flow, I expect that the market is going to break from here to this side. So to find my entry is just for me to go down to the 15-minute, 5 minutes, and to look for, market structure shift or change in market structure or transition. Then for me to find a good entry instead of depending on indicator that I don't know. So that's just it, guys. That's just it. So don't forget to like this video and subscribe to it. All right, especially for those who are new. Okay. And the link to the Telegram group is in the description box. Don't forget. All right. See you guys in the next video. Love you guys.